Traders, happy Thursday. I am Matt. He's JC. We're with Empire Algorithmic Trading, and we are here to give you VWAP Vision's Stock Talk.
It's where we just use the volume weighted average price to analyze the stock market, and that's it. Just the volume weighted average price. Like I always say, it's the best indicator on the market. So let's just get to it, shall we, Matt?
Let's bring you Stock Talk.
Talk, talk. Well, Matt, I'm glad you said Thursday because I keep thinking it's not Thursday. All the days kind of apparently they blend together for me. So, every day is exactly the same, like that classic Nine Inch Nails song. So, but
Little
anyhow,
Groundhog Day action for you.
yeah, exactly, right. Rinse, repeat, and do it all over again. What's funny is some of my associates at work, whenever I bring food for work, they're always like pasta. And today I surprised them with turkey burgers, and it was the
All
funniest
right.
thing because they went pasta, and I went turkey burgers, and everybody went, "Oh!" It was great. I loved it. I got a good chuckle about that. But anyhow, it was an interesting session on the market, kind of a quiet ho hum day. Everything kind of sold off back slowly. I mean, it kind of started up pretty positive. As the day progressed, the prices came back down. We're right back below that resistance we've been showing. But today we're going to run through the indexes, but I just kind of want to focus on the S&P 500 today because it's in an interesting spot, and you can make a case that's bullish, and you can make a case that's bearish, and you could probably do that all the time. But the way the prices are setting up is rather interesting. So let's just take a look.
Let's do it.
All right, so here we are with the S&P 500. And as you can see, it is down, let's see, just a little over 2/10 today. The interesting part, the part I'm finding interesting is one, we've got clear support right at the lower VWAP, and that has been holding up quite well. But we also have clear resistance. So we have been using just straight bar charts lately. I wanted to switch to a candlestick because you could visually see that resistance a little bit better. It just kind of pops out at the eye. I know that sucks for the Spotify listeners, but for those of you, when you get home, check it out on a price chart. You'll see there's clear resistance right now. On March 10th is when we had a big, strong gap down, and the market sold off hard. We've ran into resistance. The high of that day was 57.05. Since then, we've hit 57.03. We hit 57.15, and then again today, 57.11. All three times we've sold off of that level. So there's clear exhaustion, clear resistance at that price. That price also coincides a little bit with the upper resistance we've been seeing at the upper VWAP at about the 50, let's see, what was that? Like 56.66 area. So between 56.60 and 57.05, there's a clear band of resistance. You move up to the top side, that's where the all-time high VWAP's at about 5,800, and the support VWAP is down around 5,500. So the bullish case is this is a normal consolidation period, right? It's a low volume. The selling has abated. The sellers have kind of run their course. We have a clear low. There's a clear definition. We're most likely the pattern of markets is they sell off, they find support, and they'll test those highs. So we've got a couple of points we're going to test. We could either test the all-time high VWAP. There's another higher VWAP at about 5,900 if you draw that anchor back a little bit more, or we could even possibly test the all-time high, which was at what is that? 61.47. So that's the historical precedence: a test of the high, a test of the moves. Buyers come in and then sellers put it down, right? The bearish result, the bearish take on this is it's a very low risk, high reward setup, right? We have clear resistance at 57.05. You could short it here at say 56.60 or 5,700, anywhere around there, and anticipate that resistance is going to hold and it's going to break down. So if you're shorted at say 5,700, then your coverage is just above 57.15, which is really not a lot. It's what, 10 points, right? You would then cover down to like 5,500, or if it breaks 5,500, you would just let that sucker roll out. So you can make a bearish case that says, hey, if I think this isn't going to hold, The other bearish part is the declining volume that we've talked about. There's increasing volume on down days, and that happened again on the New York Stock Exchange. There was slightly higher volume today than there was yesterday. So you have that adverse effect, more buyers or more sellers than buyers. So that kind of adds to the bearish case. However, it's all below volume. It's all below average. There's not a lot going on. And we're really like 3 weeks away from earnings season started. So that's the bullish case, right? If earnings come in, if companies are saying, hey, the economy is still rolling. We think we're going to be able to withstand any uncertainty that we're seeing. The consumer is still there. This thing could take off, right? So that's the bullish case. So we're right at, and we've been saying it for a couple of weeks now, right at a precipice that it could go either way. So I thought that was kind of interesting. There really wasn't a lot of really interesting moves at all today that I saw. So yeah, it's just going to be a nice short and sweet talk today, and that's kind of where we're at. Just kind of wait and see. That's my preferred action, but it's just kind of fun to look and think about the possibilities that can go play out.
It's kind of crazy when you actually think about it too, because every single day you never know what's going to happen. It could go up, it could go down, right? But to see this kind of these extended patterns, and not like months and months extended, but just a short, quick, extended pattern, and trying to make those predictions and being able to make such a strong case in either direction is pretty fascinating.
It is, right? So it's the psychology of the market, right? If you were bearish, if you're like, man, there's no way this is going to end well, you could very well take a very low risk position here. If you were bullish, you could just be like, hey, man, this is just normal. We've seen the worst of it. We hit the 10% correction. I'm just going to wait, and I'm continuously bullish, right? That's my preferred take on it. But I just thought it was interesting to see, and you can really see it in those candlesticks that resistance has come into play. And so, yeah, it's a lot of fun. It's fun to watch, and that's what we do. That's what we do here every day. We haven't looked at anything else, so let's just do a quick run through. The
Sure.
Nasdaq is still holding. It's holding a little bit lower, right? We've got that upper band at a little over 18,200. It's hanging right closer to its support level. So not exactly as strong of a case bullishly as the S&P 500, since it's still trading closer to support. But one could also, again, make the argument that, hey, that's perfect, right? We want to see the accumulation. We want to see those prices near that support level. So it just means buyers are eating that up. So that's interesting. Same thing with the small caps. They kind of held out. Similar pattern when you look at their candlesticks. You got a little bit of resistance that's played out a couple of weeks ago that's playing out today. And then, of course, the mid caps have attempted to hold above there, and then they just kind of fell back below it again today. So that's kind of the way. And of course, bonds, nice little rally on the bonds, even though they also trailed off throughout the session as well. So that's it for today's stock talk, Matt. Where can?
Well, and
Oh, sorry.
one more thing to point out too is just the lowered volume on literally every single chart that you see there. So, like you said, just kind of a ho hum day.
Kind of a ho hum day, and just kind of a ho hum. All the lower volume is showing that there's a lot of people just waiting and seeing what the hell is going to happen. So
Yeah.
that's just the world we're living in right now. Earnings seasons is picking up, like I said, in just a couple of weeks, and so I seriously doubt we're going to stay calm throughout that. So it'll get exciting here soon enough. But in the meantime, let's just sit back and watch and wait for things to play out.
It's kind of like a staring contest, everybody's waiting for the other one to blink, and your eyes can only get so dry before somebody does. So we'll see what happens.
That's right. All right, Matt. Well, where can everybody find us?
Well, if you want access to our arrow signals, again, also we are working on some educational videos as well for some of you who may not be as well versed on the stock market or know all of the different terminology that we're talking about when we're talking about setting your stop loss, or when we're talking about getting in and getting into a position, entering a position, exiting a position. What's a position? We're talking about doing some more educational videos on our Patreon as well. So head on over to patreon.com/Empire Algorithmic Trading and click subscribe. For those listening on Spotify, thank you very much. Make sure you follow our page there. Click the likes. On YouTube, those of you watching us, which is really the best viewing experience you can get because you get to see the charts that Jacey walks through every time. Make sure to click the like, subscribe there. Otherwise, follow us on our socials: Facebook, Instagram, X, Blue Sky. And for more information, if you're a first time listener, head on over to our website, Vwapvision.com. That's VWAP Vision.com, just to figure out a little bit more about exactly what we do and how we look at the stock market based on our model and our proprietary algorithm that we use to give us a little bit of those sneak peeks with our red and green arrows on Patreon. So that's the best places to find us. And as always, JC, I hope you have a wonderful day and happy trading, everybody.
Happy trading, Matt. We'll talk to you in a little bit.
All right. See you, bud.
Yeah, bye.